Good morning. This is First Mover, your first global look at the day's headlines, all markets, all the time, taking a look at I'm your co-host, Christine Lee, and welcome my co-host, Lawrence Lewitinn. Welcome to the show. No glasses today, I hope. Our global markets managing editor, as well as Emily Parker, our managing editor of international content. Welcome, you two.
Good morning. You just wanted to rush right into prices, didn't you? Just get it over with.
Well, checking into Bitcoin right now, the XBX Bitcoin price right now is at 57,400. Bitcoin is up at 1.7%. Taking a look at the ETX Ether price, also trading up. ETH is up about 2.5%, trading above $2,000. Lawrence, we're having an update today. What's going on with the markets?
Well, it's an update, but it's not an update. It's still a fairly quiet day. The crypto market seems to be pausing a little bit in the sense that it's kind of in a range, a tightening range in Bitcoin and in ETH, and even the alts. The alts are not moving as wildly as they were yesterday and the day before, and that happens when markets starting to consolidate, before a next big move. The thing that's worrying people, of course, is that Bitcoin isn't hitting those higher highs. It's sort of it's not going there, which worries people that maybe there's some downside ahead. At least maybe not drastic downside, but it could be significant. It could hit some of those support levels that we were talking to Katie Stockton about yesterday. So keep an eye on those technical levels.
All right. And Emily, looking at a new decentralized finance stablecoin, FEI, not working so well for the team. What's going on there?
Yeah, so basically the TLDR on this is that it's a stable coin that's not very stable at all. This is a $1 billion FEI protocol that our colleague Brady Dale wrote a big report on today on CoinDesk.com. But basically it's ostensibly pegged 1-to-1 to the US dollar, but has gotten as far as a quarter off of that mark. So it's caused all sorts of turmoil in the market. And, the larger lesson here is that this is a bit of a warning about DeFi. There's so many new DeFi projects out there, and, investors should just be careful about what they are getting into.
All right. Good advice. All right. And our first story, investment firm D.A. Davidson raising Coinbase's price target to $440 from $195 after the crypto exchange released its impressive first quarter earnings yesterday. Joining us now is D.A. Davidson Director of Research, Gil Luria. Welcome, Gil.
Thanks for having me on.
Great to have you. All right. So the conservative estimate for Coinbase's shares is about $300 a share at a $100 billion valuation. How did you arrive at a $440 price target?
I'm using a 20 times revenue multiple on my current year revenue estimate. And in a sense, that's a high multiple. That implies very high growth. But if you think about the comparable group of stocks, which is category leading open-ended growth stories, Zoom, Okta, CrowdStrike, Snowflake, those can trade at sometimes 30 to 70 times revenue. Not to mention the fact that my estimate is for the balance of the year for Coinbase to be to generate only as much revenue as they did in the first quarter. So I think it's a pretty reasonable estimate going into next week, into the direct listing, but the market will tell us a lot more Wednesday, April 14th.
Hi, Gil. So a little bit more on those valuation matrices, because you had, for instance, I kind of want to go into how did you arrive at your growth levels for your top line, the revenue numbers? Because the way I see it, what I saw on your report there, your first quarter you had to revise it because Coinbase came out 3 times what was expected, but then Q3, Q4. Q2, 3, and 4, you have it back down again. Where did you come up with those numbers? Are they just you just grew them, like 1.05 times the previous quarter? How did you come up with those numbers?
Coinbase's results are very hard to predict, and we all know why. It's because their results depend on trading activity in crypto assets. Trading activity in crypto assets depends on crypto asset levels and changes to those levels. So it's going to be very hard to predict Coinbase's results. What I did is assume that really crypto assets grow at a relatively steady pace from here on in, which we all know is a very tough assumption to make. It's the only one we can make right now. But that means trading volumes will be lower. If crypto assets only go up moderately, trading volumes aren't going to be as high as a period where crypto assets went up dramatically, just because there's less volatility, there's less trading. And so my assumption is, if we look at the last 3 weeks, you just talked about that, crypto assets have been relatively stable. That means lower trading volumes. So what I did is I pegged the balance of the year somewhere between the fourth quarter of 2020 and the first quarter of 2021, because the first quarter of 2021 had that huge ascent, which came with a very high trading volumes. And that's how Coinbase would pay on trading volumes.
So you just then allocated that for the remaining 3 quarters. And then wouldn't it also make sense to maybe not look at it or value it according to revenue as a multiple of revenue, but as a multiple, let's say, of customers or some other asset-based metrics?
The ways to value crypto assets are many and different, and fundamental analysis on crypto assets can rely on a lot of different metrics.
I mean, balance sheet. I mean, along the lines of the balance sheet. So in other words, find some other aspect of of their business to do the multiple against. Wouldn't that be a better way to do? I think different people are going to value Coinbase differently. The reason I pick a revenue multiple is so I can compare it to those comparables. Coinbase, there's no other pure play crypto mega cap. And so to be able to compare them to other stocks in the stock market, I had to broaden the view and define it in the way I described earlier, which is open-ended growth stories in a category dominating kind of gold standard type companies that I listed earlier. And those trade as a multiple of revenue. And so to compare Coinbase to those other stocks, I use the revenue multiple, but there will be a lot of other ways to value Coinbase, and there's going to be very healthy discussion going on, especially starting next week.
Let's talk about risks for a moment. So in Coinbase's own S1, they outlined what they saw as potential risks. And this ranged from, Binance, exchanges like Binance not being subjected to the same level of regulation. They talked about decentralized exchanges. They talked about Satoshi Nakamoto possibly coming back. It was a whole range of risks. Which of these do you see as the most threatening to potential success?
Yeah, I think we'd all love to see Satoshi Nakamoto come back. So I'm not going to count that one. I'd say the biggest risk of all to Coinbase is a hack. Part of what Coinbase is to people is this great venue that's been able to stay safe, been able to stay compliant. That's why they're attracting institutional investors. That's the most important thing right now is the inflow of institutional capital is really in early stages, and they're so well positioned. If you think about it, really it's them and Grayscale that are best positioned for institutional capital because of the founders, the credibility, the security, the compliance. And so that's the real opportunity. Yes, they compete with pure play global players like Binance and Huobi and et cetera. But institutions are not going to put any money there. I guarantee you they are not putting any money there. If they're putting capital, they're going to put it at the most credible domestic counterpart. They're not going to venture away from that. And so for that part of the business, that's less of a risk. In the retail business, hey, Coinbase has competition, absolutely, from those folks. And actually, I'd say more importantly right now, from Square and PayPal. From Robinhood.
So another risk that Coinbase did not talk about in their S1, but seems like a risk to me, is that, as I'm sure you remember, they had a major controversy a few months ago when they declared their mission to be apolitical. They had some 60 employees leaving. There was a big article in the New York Times saying that it was not a good place to work for people of color. I mean, is this, now people seem to have kind of forgotten about this because there's so much hype over the IPO, but is this going to come back to haunt them?
I think they're going to have to do better navigating those types of topics going forward. I ascribe that to just lack of experience in the spotlight. I think that every single company in the United States has to and has grappled with those types of issues, and I'm not sure they did it in the best way. Hopefully, they've learned their lesson and will handle it in a more respectful, inclusive way. And I'm pretty sure they will. This company has grown phenomenally, and they've done so by learning and adapting.
Gail, your 440 price target also, in a way, relies on consistent revenues, but we do know that Coinbase has said, they've had net losses in 2019, I believe was their latest one. We know that the crypto market can be volatile. Do you see headwinds in that regard?
Yeah, this is not going to be a straight line growth story. Absolutely not. During crypto summers, these guys are going to do great, and crypto winters, they're just not going to do as well. Their revenue depends on volatility. It depends on crypto asset prices. And when those are going up, they're going to do great. And when they're not doing as well, they're not going to do as well. And Brian Armstrong communicated very clearly the fact that he, at least in this stage of growth, doesn't expect overall to make money. He expects to generate very healthy profits in periods where crypto assets are volatile and going up, such as the first quarter of this year, where they generated a tremendous amount of profits, and to lose money when crypto assets are going down or volatility is down. And over time, for that to even out, I think that's a very reasonable expectation. And again, consistent with that type of company, open-ended growth stories with a long runway. That's how they should be thinking about the business, how to grow it as fast as they can through the ups and downs. So when the market becomes more mature, then they can focus on profitability and margins.
All right, great. Gil, thanks so much for your insights. Appreciate your time.
Thanks for having me.
That was DA Davidson Director of Research, Gil Luria. Coming up, crypto markets analysis from Chainalysis.
Welcome to the Daily Forecast, April 8th, 2021. The total market cap of crypto is down about 2.5% from the day before during the Asian trading hours, dipping below the $2 trillion total market cap level once again. Why? Well, we're seeing developments coming out of South Korea today that could have played a key role in shifting global prices. Hi, I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. What goes up must come down. Certainly that's the case for South Korea's kimchi premium, the gap between crypto prices in South Korea compared to the rest of the world. That 20% plus premium on Bitcoin prices fell to less than 15% in a matter of hours. So what happened? Well, one of the nation's largest exchanges, Upbit, halted trading briefly before coming back online. Around the same time, the Prime Minister's office shot a stark warning across the bow for local investors. The third most powerful official in the Prime Minister's office stressed that crypto is not an official currency nor an investment product, and its value is guaranteed by nothing. He also said there'll be more scrutiny of transaction data when the 20% income tax on crypto earnings kick in January 2022. Forecast News spoke to the head of blockchain research at top university in South Korea today to find out what this means for crypto development there.
그러니까 이제 정부가 이제 한번 경고성 시그널, 이 가상자산이라는 것이 뭐 본질적인 내재적인 가치도 없고 그다음에 누구 하나 보증하는 것이 아니기 때문에 모든 책임은 개인이 져야 된다는 그냥 일반적인 경고성 메시지를 던진 거고요. 근데 저희 같은 경우는 항상 그래왔기 때문에 우리나라 암호화폐 시장에서 암호화폐 하시는 분들은 별로 크게 뭐라 그럴까요? 느낌이 없어요. 원래 그래왔기 때문에 느낌이 없고 그냥 아주 일반적인 사람들, 그냥 요즘 들어오는 일반적인 사람들은 약간의 어떤 주춤하는 그런 거지. 그리고 가상자산에 대한 사람들의 관심은 높아져서 투자를 하고자 하는 사람들은 많아지는.
Forecast News has also learned from government sources that not one exchange has yet applied for the soon-to-be required licenses to operate an exchange. But we do know of at least one who will. Dunamu, parent company of Upbit, told Forecast that they do plan to apply before the September deadline this year. All right, taking a look at market moves now. Spot prices on Bitcoin topped out at around the $57,000 mark at 4 p.m. local Hong Kong time at the close of Asian equity markets today. And that's 1.5% change from the day before. The broader equity markets in Asia were mostly flat. Tokyo stocks ended lower as Japan's capital battles a fresh wave of COVID-19 cases. And just how are cryptocurrencies doing? Well, at the close of Asia's market day today, Ethereum also ended lower by around 2% on a mixed day in crypto as well. Though notable, we did see the WRX token jump by over 56% today. That's thanks to an Indian exchange WazirX's launch of the country's first NFT platform. This little interesting tidbit we found for you today. Did you know all of the top 5 finance apps downloaded in the App Store and Google Play Store in Korea are related to crypto? That's right. One thing you might find interesting, though, is that Binance, which shut down in South Korea December of last year, is still in the top 10 of both lists. But the days of bypassing regulations may be limited. South Korea's national police say they intend to crack down on illicit crypto activities, including leveraging foreign exchanges. I'm Forecast Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in on Bitcoin, the XPX Bitcoin price trading at $57,362. It is up about 1.5% over the past 24 hours, and the ETX Ether price is also up at 2028, trading up 1.8% over the past 24 hours, according to TradeBlock data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. And joining us now to discuss the crypto markets is Chainalysis chief economist, Philip Gradwell. Welcome, Philip.
Hi, it's a pleasure to be here. How are you?
Pleasure to have you. All right, so you recently wrote a market intel report. We saw that, altcoins have recently, ETH is over $2,000, but you seem to suggest that ETH will not be able to hold 2,000 support. Why is that?
So I've been looking at the data on chain about who's holding these different cryptocurrencies and the cost that they pay to acquire those cryptocurrencies. So we can see when the assets go into their wallets and what the price was at the time. And what's really interesting is there's actually relatively little ETH that's been bought at actually over $1,850. It's only about 7,000 ETH has been bought above that price. And at 2,000 ETH, it's really like just about sort of tens of thousands of ETH that's being bought at that peak price. And the reason why this is important is because the price that people are willing to buy and hold at tells us the level of demand that there is at that price level. So not a huge amount of demand at that $2,000 price, but certainly plenty around $1,800 or $1,850.
Phil, good morning. There are a couple of questions I have on this because so when you're talking about ETH having a narrow base of support, about a quarter of it, for instance, was held at exchanges. You acknowledge that in your analysis. Those exchanges bought that ETH potentially at lower prices, and their customers may have paid for ETH at higher prices. So the numbers that is your data kind of skewed low? if we could take a look at some of your charts, the second chart that you sent us, or that you were in your report there. So, as we see here, it obviously it's gone higher, but is it higher still?
Yeah, so two things on that. You're absolutely right, and I wrote about this, that Ethereum that's held on exchanges, on centralized exchanges, we might see higher prices for ETH that's bought there than we see on chain. However, actually, a lot of ETH is now being traded on decentralized exchanges, and that actually would show up in this on-chain data. So I'm not so worried about that downward bias for ETH, although that might be stronger on Bitcoin. So what this chart shows us, go ahead.
Yeah, well, about bias, for instance, a lot of your model, to be sure, is that based on the idea of some sort of behavioral bias in the buyers? I mean, or are you assuming that people who own ETH aren't looking at it from future price movement, but based on their previous purchase levels?
Yeah, exactly. So it's looking at the price that someone was willing to buy and hold at, and that's really your minimum valuation. If you bought ETH at 1,800 and you continue to buy it, then you value it at least at 1,800. Obviously, you're hoping that it's going to go higher, but if the price were to say go to 1,750 and you kept buying, you kept holding your ETH that you'd bought at 1,800, then maybe you'd want to buy some more when it's 1,750, because that actually would then be a good deal relative to your valuation. So this data is all about price floors, not about the ceiling.
So they're not. The assumption is that then the holders of ETH don't change their opinions and don't change their forecasts based on future events, for instance. That, in other words, if they say, "Well, I don't want to hold this anymore. I'm going to sell, even though I paid 18 and it's now at 17." You're saying that people just won't sell at a loss no matter what? Is that the assumption, or is it?
Not at all. This is not even an assumption. This is actually the data about who's holding what on the blockchain. So it's actually sort of the observed behavior. And what's actually interesting is if you look at this going back in the past, with ETH, for example, we saw prices go, over 1,500 at the peak and then go way down, through 2018 and 2019. A lot of people who had bought at those high prices actually sold. They capitulated. They said, we don't think ETH is going to go back to this high level. But we could actually observe some wallets that had bought their Bitcoin at that late 2017 peak, and they just continue to hold it. So again, it's really about understanding people's minimum valuation. The price that they're willing to acquire their ETH and hold it is the minimum that they seem to be valuing it. If the price were to go below their valuation, then surely they would sell.
Hi, Philip. Can you talk a little bit about the impact of DeFi on liquidity in the ETH market? Yeah,
so, really, I think it's created a huge amount more liquidity in the ETH market than there was before. We've seen very large outflows from centralized exchanges into DeFi platforms. Although I think an interesting thing, though, is actually an increasing amount of ETH is being wrapped, and therefore it can be used to trade for other tokens much more easily. But that actually locks up some of the ETH supply. So, for example, at the moment, there's over 7 million ETH locked in to the wrapped ETH contract. The average cost when it went in there was about $1,800. And so the big question is, that ETH is kind of off the market unless people decide to unwrap it and sell it. But of course, it's providing liquidity on decentralized markets because now it's more easy to trade with tokens. So overall, decentralized exchanges have resulted in a lot more ETH flowing around. But we've also got this strange dynamic that wrapped ETH is actually really liquid, but that is taking some liquidity out of the kind of pure ETH market.
All right, Philip, thank you so much for joining us this morning and giving us your analysis on ETH.
It's a pleasure. Thanks for having me.
All right, that was Philip Gradwell from Chainalysis. Coming up, COVID vaccine passports and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
IBM's blockchain-based COVID-19 passport is live. People can flash their proof of vaccination or test results on their smartphones, much like a mobile airline boarding pass. The idea is to get people safely back to work, school, and to travel again. Joining us now is Eric Piscini, project lead for the Digital Health Pass app at IBM. Welcome, Eric.
Thank you. Thank you for having me.
Great to have you here. All right, so Eric, for the past week and a half, this program has been launched in New York State using the Excelsior Pass Wallet app. What is the scope of this program and how does it work?
Yeah, so the idea when we started working with the state of New York was to be able to deliver for free the ability to demonstrate your vaccination status or your test results to anyone in the state. So as soon as you get your vaccine, you can wait 14 days after being vaccinated, fully vaccinated, and then you can download your vaccine result like you see here, and you can present that to anyone in the state and demonstrate that you've been vaccinated. So you can go back to a stadium, you can go back to flying again if you fly international, and anyone can use this application today. So the scope is the entire state, everybody in the state. And we did that for vaccination and actually for test results as well. Very, very important.
And do you see that rolling out to other states? And is this New York's main app that we will use? Or I mean, there are other apps out there as well, correct? Or
yeah. So what New York for us was the first public launch of our platform. So very important. We are now talking to many other states in the US, as well as many countries outside of the US, because they are looking to adopt similar solutions to be able to demonstrate for each of their residents the vaccination status. So we are opening that platform, which is really an open platform today, to anyone who wants to use it. So if any one of your listener wants to connect, please do that, and we can work together. But the idea is to create an ubiquitous platform where everybody will be able to travel freely and demonstrate their status with a single credential, a single set of credentials. So that's very important. We as IBM are a global company, so we are delivering this solution at a global scale.
What about competition with other apps, similar apps that are trying to offer COVID vaccine passport options?
Yeah, and every one of those competitors are also a partner because the nature of the platform that we've built is really to say we are going to open this platform and we're going to interconnect with everybody who wants to participate in this ecosystem. So we are talking to pretty much all our competitors today in order for them to recognize the credential that we create for our clients and vice versa, for them to recognize the credential that we create. So we have a cross-reference of credentials being presented across the globe. We know that despite the fact that we are IBM and a large organization, we need the entire ecosystem to build that with us. So that's clearly the goal, is to turn every competitor into a partner.
So, Eric, what role did the state of New York have in developing this? How involved were they in terms of the actual development and coming up with the data and things like that? Or were they just licensing it from IBM? Is that what's going to happen with the other states, or are they going to be involved in choosing what data points to take in?
No, the state of New York was deeply involved into this project. This is their project. We just provide a portion of the technology. So if you think of it this way, the state of New York already has a database of vaccination records for everybody in the state. This is mandatory. It's been around for 25 years. Nothing new here. They also collect test results from 20 different organizations in the state, and they expose that information onto a database. Then what we enable as IBM is the ability for you as a citizen to look at this information. So you authenticate yourself against those databases, not with the IBM, but with the state, and they expose the information to you. You can now import that information on your phone, and you can present that information to a stadium, to an airline, to your employer. We as IBM do not keep the information on our platform, right? So to answer your question, the state of New York was own the data, operate the platform. We provide the pipes, if you want, and the blockchain platform, and they are operating the platform. So this is really a partnership between us and the state.
So then why was a blockchain needed? Is it really a blockchain? Why not an Excel spreadsheet? Why not a simple database? Why does it have to be blockchain?
So it has to be blockchain for two main reasons. The first one is the immutability of that platform, right? So once you create a credential for an individual, and that individual collects this information on their phone, no one can change that event. No one can change the content of that information. And that's really important, as you all know. And then the second piece is that we operate the platform with other partners. So it is not just an IBM platform. It's a global platform that we are building here. And that creates the decentralization aspect of the platform. Again, I want to be very clear. We are not keeping information at IBM on this platform, because we don't need to. And blockchain gives us the opportunity to do that using many different technologies. But this is the core of the platform, the ability to not keep this medical data onto the platform.
So there are basically two major sources of controversy here, as far as I can understand. One is going to be the security privacy issue, right? So even if you are saying that this is a secure and private way to store data, what would convince the average New Yorker that this is true? Because for most people, blockchain is still a very new, very mysterious technology. How do you convince people that this is safe and that this is something that doesn't threaten their privacy in some way?
Yeah, and I don't know if you noticed, but we are not actually talking too much about blockchain when we talk about the platform, because we know there is still an education to be done around the topic of blockchain. So we don't focus much on that. What we do focus on is the ability for people to control the information that they have on their phone, right? And we say, this is your information. No one has access to it, despite outside of you. And you control how you share this information as well. You don't have to share this information. This is your choice. The second piece around security and privacy is that when you authenticate to collect this information from the state database, you have a very strict set of security policies and procedures to import this onto your phone. And by the way, I didn't mention, but this is very important too, if you don't have a phone, because not everybody has a phone, you can also print that credential with you and keep it in your wallet to be able to demonstrate your status to a stadium, which is very important from an inclusion point of view. The last thing we want is create a gap between people who have smartphone and people who don't when it comes to re-entering the economy, re-entering communities. So that's very important to us. One of the core value of IBM is translated into the platform here.
So thank you. There's also another controversy here that has absolutely nothing to do with technology, which is that a lot of people just feel like they have a right not to be vaccinated and they don't want to be vaccinated for whatever reason. And, they're afraid that this is going to turn New York or wherever into a kind of two-tier system where the vaccinated have certain rights that the non-vaccinated do not. And I'm just curious, because this is something that blockchain technology will not fix, but it's still like a key part of this controversy. I'm just curious what your thoughts are on that.
It is, and I think so. Maybe two things to consider. When you look at IBM and they look at the people within IBM, we have former CDC officials, we have physicians, nurses, and we worked very closely with all of them to build the platform. And to address your point, which is a public health issue, what we are saying is, if you don't want to be vaccinated, but the stadium requires you to demonstrate your status, you can go get tested. And you get the test, you demonstrate that you are not sick, and you can enter the stadium. This is a stadium decision, not our decision, obviously. But you have options, right? Optionality is very important because we acknowledge that not everybody will get vaccinated, and not everybody will be willing to share a vaccine credential with someone else. In that case, you can go get tested if you want to. So a lot of options on the platform.
Eric, thank you so much for joining us this morning. Really fascinating topic. We all want to go back to work, go back to school, but we also want to make sure that it's done in a responsible way that respects privacy and our security. Thank you so much.
Thank you. Thank you for having me.
All right, that was Eric Piscini, project lead for the Digital Health Pass app at IBM. And time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Welcome, Nick.
Hey, good morning.
Good morning. So we saw that you had written this article on these mysterious filings that suggest an imposter is using Grayscale's name to pump obscure coins. Tell us about what you found out.
Yeah, so this was a weird one. Basically, there are a pair of registered entities in the state of Delaware that have the name Grayscale, Token Trust, where the tokens are NAMI or Theta. And this basically, the names resemble the existing trust that Grayscale has either already launched or has registered in anticipation of launching, but they have nothing to do with Grayscale. And according to both the projects, NAMI and Theta, they have nothing to do with those projects either. Basically, it looks like someone has gone to the trouble of registering entities in Delaware to resemble, to make it look like Grayscale is planning to launch investment vehicles for these two tokens, even though no one who's actually part of these projects has any intention of doing so. So that was a bit weird. And the NAMI one was filed on April 1st, and it was reported on earlier this week, and that actually led to the token's price doubling for a brief period before falling down again. So it might be that these filings were designed to pump up these token prices.
So, Nick, this is, of course, the craziest story imaginable in many ways. But there is no record of somebody showing up in Delaware with their ID and turning in papers and saying, hey, I want to register this. I mean, what do? They mail the documents? Do we know anything about the process?
So we're going to get into the weeds a little here. But basically, I spoke to a couple lawyers, and my understanding is that basically anyone can file to create an entity. These two trusts are limited liability corporations, which is an important distinction. Every other Grayscale, all the legitimate Grayscale trusts are statutory trusts. But basically anyone can file. I did, call up the Division of Corporations and ask them, hey, can you tell me anything about who filed these? And they said, no, they can't tell me anything. I did file a FOIA request, and, I'm waiting to hear back on that. But they said that also wouldn't tell me who exactly filed these entities. So it does look like, there's no immediately easy way to say, to find out who exactly went in and said, hey, I want to set these up. The registration agent that they used does have the same address as the one that all the existing Grayscale trusts have. So, whoever.
But do we even know if that was an actual registration agent?
That I don't know, but I can tell you, it is the exact same address, right down to the postal code, the street, and everything. So basically, whoever did this did go to at least a little bit of trouble to make it look like it was Grayscale filing these.
Nick, just real quick, yesterday, Peter Thiel made an interesting comment suggesting that Bitcoin was part of some Chinese plot to take down the US dollar. What's your off-the-cuff reaction to that?
What? I saw that. I saw the video, and I was like, I don't know. It's the really interesting thing to me is that Peter Thiel's the one saying that. He's been into Bitcoin for a while. I didn't, there must be something else at play here, because I don't see him suddenly, changing his mind after, investing in Bitcoin and supporting Bitcoin companies and all that for years. Yeah, I don't see him suddenly saying, okay, well, you know what? No, I was wrong about all of this. It's actually a Chinese weapon. It's going to destabilize the dollar. Mm-hmm. We're moving on. I don't know.
All right.
It seems a bit of
all right, Nick. Thank you so much for joining us this morning, Nick, with your update. And just note to viewers, Grayscale is a sister company to CoinDesk under our parent company, Digital Currency Group. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Coming up tomorrow, special guest Melson Demiras, Chief Strategy Officer at CoinShares. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.